Hey guys, welcome back to the channel. In today's video, I'm going to be providing a long-term market analysis update for Ergo. We're going to cover this key range from $1.62 up to the resistance, the range highs at $4.33. We're going to talk about some levels of support further down from here, some moving averages, as well as the Ergo Bitcoin ratio and some things I'm noticing on this chart. So if you guys enjoy the content, make sure to leave a like and subscribe. Also, by the way, I will leave a link to my Twitter page in the description below. You can go ahead and check that out if you want. I'm fairly active over there as well. So I really do want to talk about this key range that we had discussed going back over the last few months for Ergo, where we had this support, this level right around $1.62, and that was our longer term level of support. That was the pivot point where we bounced off back here in March of 2021. Ultimately, from there, Ergo was able to reverse this downtrend and then form a new all-time high. And then eventually we did get that retest again right here in July. We talked about how this would act as a region of support, and we saw a pretty significant and impressive bounce off that region. And from this local low that we had in July, Ergo was able to rally by about 230% up to the range highs and to this moving average. And then eventually we had that rejection. We've come back down, and Ergo over the last few weeks has broken below this range, and we're starting to form lower lows coming back below this low that we formed back here in July. And this really isn't too surprising, where we've already seen Bitcoin do the same thing, coming back below its low that it made around $17,500. It's broken that by 10 to 15%. The majority of altcoins have also broken down, so naturally Ergo is just following what the rest of the market is really doing. So at this point, considering we have had two weekly candles fully below the range lows at $1.62, I'm really going to be watching out to this next longer term level of support coming in around $1.17. Now this is going to be an important region because going back here to August of 2020, that was the high in which Ergo had a pretty significant rejection off of. In fact, if I just take a measured move here, you can see from this point, Ergo declined by about 78% in just the following 18 weeks. So a very huge rejection and interaction off this level. So I would consider Ergo to have a lot of support in this region if it does start to come back down and continue to form lower lows. So I will be watching out for this zone in particular. And another thing I'm going to be watching out for is if Ergo can reclaim this range and get back above this level of previous support around $1.62. And for Ergo, we've already seen several times where it has had a fake out outside of the range, and most notably that has occurred on both upside attempts. You can see this move right here in March actually broke out above the range for about 3 weeks or so, but ultimately we came right back under this, formed this fake out, and then entered back within the range. And that also happened on this move back here in August. So that could certainly happen, but this time on the reverse to the downside, where we could have the potential for Ergo to come back and break back above this level and then just enter back within the range. And something like this would be especially important to watch out for because, as we've seen, these tend to be pretty powerful signals. When you do get a deviation to either side, it does tend to signal that a powerful move is coming in the reverse direction. But that being said, deviations are supposed to be less likely to occur because by nature they are supposed to be traps. So I would say that my primary view is going to be watching out for a move back down to this support. I have marked out in green, again, the high from back here in August of 2020. And at that point, I would really expect support to be held and for buyers in demand, again, to start to step in at this region. Now, beyond that, I also do want to talk about some resistance levels. So we're going to be looking at this 50-week simple moving average, the line in yellow, and that is where we rejected at back here in August on this lower high back around the $5 range. So today, the 50-week moving average is coming in around $3. But what's important to note is how over the last few months, the 50-week average has averaged down very quickly. And if I were to just take a line extending this out a little bit further, you can see that the 50-week average could reach some much lower valuations towards the end of the year and into Q1 of next year. And just for example, at its current slope, it could reach somewhere around $2 by February. But obviously that is subject to change and will depend on how we do have these weekly closes coming in. And just to give you guys an idea of why this is averaging down so quickly, if we were to go back 50 weeks ago for Ergo, you can see that we were closing prices at these levels around $5 to $6. So we're averaging down much lower than those prices 50 weeks ago. So this is going to have a pretty aggressive downward slope. So if we do get a retest of that level, which is certainly plausible considering it could be in that $2 range just a few months out from here, then that'll be a very significant retest. And considering this was strong resistance back here in August, whether we get that rejection similar to how we did on the last lower high, or if we can break out above it, will be a very significant retest and will tell me a lot about what the longer trend could entail. When you're below a 50-week average, it really isn't the best look for the longer term trend because you have that declining level of resistance. But breaking back above it would be a very bullish sign in which we would no longer have that overhanging threat of rejecting and forming those lower highs off of that downward sloping resistance. So much further out from here, but definitely pay attention to that into the next few months as this is going to be averaging down pretty quickly. So I also do want to talk about the Ergo Bitcoin ratio, and with this chart, we've really just got this range with the support at 7,200 Satoshis and the resistance at 12,000 Satoshis. Now, over the last few months, Ergo actually had a breakout above this range, but ultimately we came back down. We retested the range highs and were unable to flip it into support. So now we've entered back within the range that we really just kind of formed since December of 2021. And you can see that structure of just basically going from the highs back down to the lows, back to the highs to the lows, and repeating that process. And now that we've broken below the highs, there is most likely a chance in the next few weeks we do get a retest of these lows, and it's going to be important to see if Ergo can continue to hold this as support. Since this has already broken down and we've already lost that range low at $1.62, this is really the bullish scenario for Ergo, where if it does get that retest and it has a strong reaction and strong bounce off of it back to the range highs like we've seen on the previous two attempts, then that would bring a lot of relative strength into Ergo and could potentially help it reclaim this level, this range low at $1.62, and then form that deviation. So if we do get that move, look to see if Ergo can bounce off this level again at around 7,200 Satoshis. And if Ergo can start to have some relative strength with respect to Bitcoin and outperform Bitcoin on any move to the upside or to the downside. So I hope you guys did enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I'll leave a link to that in the description below. As always, I hope you guys enjoyed, and I'll see you in the next one.